Hello, everyone, and welcome to China AMC's Tech Innovation Deep Talk. I'm your host, Richard Pan. If you have been watching the markets lately, you will notice a clear and powerful trend. Over the past 3 years, the Hang Seng Tech Index has increased by 85%. Global investors have growing interest toward Chinese market, particularly its technology sector. This is not random. It's driven by a fundamental shift. China tech companies are moving from a technology follower to an innovation leader. Breakthrough moments in industries like AI are showing a new model. Innovate in China, expand globally. This change is bringing fresh energy to global investors, giving Chinese tech stock a key chance right now. At this time, a new ETF focused on this theme has officially launched on Nasdaq, issued by Radiant Investment Research and tracking Selective Transformation Tech Index. This ETF, CNQQ, is specifically designed to target high-growth Chinese tech companies with robust R&D and exceptional innovation capability. It offers global investors a refined, direct gateway into China's next-generation tech and innovation sector. So, how should we best seize this historic opportunity? Today, on Tech Innovation Deep Talk, we are honored to have two distinguished guests to help us answer that. Please welcome Jason Su, Chairman and CIO of Radiant Global Advisors, and Alan Lam, Chief Financial Officer of Xiaomi. Jason will share his insights on the investment strategy and the unique design of CNQQ, while Alan will discuss China's technological progress through the lens of one of the most innovative companies in China. Hi, Jason. Let's start with you on the investment value of China's tech innovation. So, what is CNQQ? Can you tell us this new ETF and the underlying index it is tracking, and how this complicated project eventually come to fruition?
Sure, absolutely. It has been a project that's taken a year in the making. The index itself is co-designed by China AMC, your organization, and in my organization, Radiant. And just about 3 weeks ago, we launched the ETF tracking the China Transformative Technology Index on NASDAQ. And the ticker CNQQ, you can guess, China, NASDAQ, China's QQQ. So a play on what everyone's been very familiar with, which is the QQQ that tracks the American tech titans. Now, CNQQ, I think, to your point, is about this growing awareness that China has broken through to its second phase of transformation. It is no longer just a fast follower. It is no longer just the manufacturer within a larger global ecosystem. It is now in its own right, able to compete as an innovator, right? Able to compete as a first mover. And that very much, of course, think of that as the DeepSeek moment. And I like to think of the DeepSeek moment as when California, because I grew up in California, as when California in 1976 finally beat the French in winemaking, right? This was, Chateau Montelena. This was Stack Leap that first proved that Americans could be just as good as winemaker as the French. And this DeepSeek moment is really China's announcement that it is just as capable at software and hardware innovation. And more importantly, this breaks China away from the traditional allocation mode, right? Historically, when American pension funds invest in China, they're either thinking, okay, well, this is a way to access one of the largest consumer market in the making. Sure, it's not quite the size of the US, but it's in the making of becoming larger and more meaningful. And it won't just be consuming Coca-Cola and iPhones, right? It's going to consume local phones made by Xiaomi, right? And it was also meant as a way to capture the leftover table scrap in the global value chain that is assigned to manufacturing. Those were sort of not significant enough for China to earn a very large allocation in a global portfolio. But now with China evolving from stage one to stage two as a full-on competitor, in addition to a collaborator sharing, a smaller slice of the pie, now as a full-on competitor, pension funds are thinking, well, what if the right AI solution isn't discovered by Americans, but by the Chinese? What if, China sort of puts up a larger barrier and it's really going to be the Chinese technology titans who will deploy and earn all the rent from their technology, sold to the Chinese market, right? And so I think with this second evolution, now people are thinking they got to go bigger with China. It's impossible to ignore China if they want to capture part of the innovation that China is capable of creating, and also capturing what the productivity those innovations can create in the domestic Chinese market.
But we also notice there are some similar of some other tech index, Chinese tech index, such as Golden Dragon or K-Web or CQQQ. So what's the advantages does CNQQ offer in terms of index composition methodology, investment strategy, or other key dimensions?
Yeah, I gotta say, this is where there's definitely an advantage being a second mover, because the first movers have all largely created a product that at the time was the easy to access product, which is just Hong Kong shares, right? So if you look at K-Web, you look at Golden Dragon, they basically are just buying the Babas, the Tencents that are listed in Hong Kong, because at that point in time, the Connect program wasn't as up and running, wasn't as widely recognized. There probably weren't as many meaningful, creative companies listed onshore. Now, roll the clock forward 10 years, right? At this point in time, some of the most exciting names, some of the sleeper names are trading a low valuation that global investors haven't discovered. They are trading onshore as A shares, right? And so in reimagining, rethinking what is the proper way to give you exposure to China's NASDAQ, this product differentiate by giving you access to the onshore A shares. So that's really critical. Just from the get-go, the universe is a broader, more relevant, more meaningful universe to start with. And then, of course, within the methodology, there's not just the universe. There's also what do you select from that universe and how much weight to give to it. And again, most of the generation one products use a very naive cap weighting. And that's basically how most indices are created. Big companies with a big market cap gets more weight, right? And I've written many papers on why that's a bad idea, particularly in a noisy market, right? You really want to weigh the company by its fundamental characteristics, right? Not by its price fluctuation. As a result, using a factor approach that focuses on growth characteristics and weigh the selection by the growth characteristic, you just get a higher quality index that's more concentrated in quality growth.
So it's very smart. As we know, some index are mainly focused on or decided by market cap, weighted by market cap. But you guys use smart beta to decide which company is better or which company fundamentally is can be deserved, has more weight. Yes. In the index, as we know, in the index, Alibaba or Tencent dominate in some index, but in this CNQQ, and not only offshore Chinese companies, but also some onshore Chinese technology companies can have decent weight in this index. I think it's a very smart idea. So let's transition to our conversation to the CFO of one of China's most advanced or most important technology company, Alan Lam from Xiaomi. Alan, I want to start with Xiaomi's incredible ecosystem. Xiaomi is so unique. It is the only company in the world that can compete successfully across smartphones, home appliances, and automobiles. How did Xiaomi successfully implement your human, car, and home strategy, particularly for its automobile business? As we know, investors have very high expectation on the automobile business. What's the Xiaomi's long-term vision?
Well, thanks, Richard. As you know, Xiaomi is only 15 years old, right? We started making smartphones, and then we started going to the IoT businesses. And in 2021, we announced that we are going into the EV business. 3 years after that, in March of 2024, we launched our first EV, which we call SU7. And in June of this year, we launched our second SKU, which is what we call YU7, which had effectively competing our human times car times homes ecosystem. And obviously, we have done very well in the smartphone business. We were number 3 globally. We've done a lot of interesting products in the IoT side, right? Everything from smart bands, vacuum cleaners, to laptops and other things like that. For the EV, which is that you mentioned, in the 18 months since we launched our first products, we've delivered close to 400,000 cars with only 2 products, the SU7 and the YU7. A lot of people have asked us why we were successful into getting into this business. We summarize that in 3 major points. Number 1 is our dedications into this business. Right at the beginning, we talked about we are going to invest $10 billion over the next 10 years for our EV ventures. Number 2 is we make the CEO of the entire group, Mr. Lei Jun, the CEO of the EV business. So he's responsible for driving the whole organization forward into this new venture for us. So the dedication is very, very important from the very top. We do hold very deep respect for the automotive industry. So at the beginning of the journey, we're trying to learn from the best, whether it is mechanical architecture, whether it is the intelligence, whether it is electrifications. We try to learn from the most advanced players in each of those fields. So following the existing practice is important, we think. But at the same time, we want to pursue innovation. How can we introduce more innovations into this industry while following the industry practice? And I think that's very important too. I think the number 3 is learning from the consumer electronics industry and using our own Xiaomi model and Xiaomi methodologies and getting into this EV business, right? If you think about what we've done in the 3C world, in the consumer electronics world, it's all about making killer product model. Killer products means that we try to do bigger revenue size with smaller number of SKUs, right? Try to maximize economies of scale. Number 2 is how do we deploy our new retail model, both online and offline, to distribute a new product like an EV product? And how do we premiumize our products? I think these are the philosophies that we have applied in the EV in the consumer electronics business, and now we're translating that into the EV business, which has significantly improved the efficiency of the entire ecosystem. And today, as you know, that given our human and car and home strategy, we are trying to maximize the synergies we can extract in each of these product lines. So over the past 5 years, I think that you've seen Xiaomi evolved from what we used to be calling ourselves a mobile internet company to now we are a smart manufacturing company, a company that invested significantly in fundamental technologies. And our long-term vision is to become a global leader in the evolving realm of cutting-edge technologies. And obviously, we have very high ambitions for each of our product lines. And for EV in particular, we do want to become the top 5 global automakers in 15 to 20 years' time.
That's so impressive. I remember CEO Lei Jun in one of his interview, when people ask him why Xiaomi want to enter the car business, and his answer is because there is some similarity between home appliance and the EV, because the key components such as motor are slightly similar, and the suppliers are similar. So right now, after 2 years, Xiaomi since Xiaomi launched the first car, it's very successful so far, very, very successful. So how do you think about this synergy between home appliance, between smartphone and automobile?
There is a lot of similarities between what we've done in smartphones as well as in IoT with the EV business. As we go into looking into the EV business in detail, one of the belief that we have is it's going to be another piece of consumer electronics, right? And once you get into a consumer electronics world, it's all about software, hardware integration. It's all about supply chain management. It's all about economies of scale. It's all about investing in fundamental technologies such as operating system, such as chipset, such as AI. So obviously those are the similarities, right? And how we can effectively leverage our distribution network, how we can effectively leverage our strong and loyal user base to tackle this new business. And obviously there are other not so similar stuff, right? Because in the old smartphone world, we don't have to worry about manufacturing. There are a lot of advanced manufacturers who can help us manufacture our smartphones. But in the EV world, we now have to build our own manufacturing facility. And obviously the focus on safety, quality of the products are much higher in the EV world. So we also have to spend a lot of effort in terms of the quality management, in terms of safety management of this new EV business. But so far, so good. I think we have been able to apply a lot of the lessons learned we learned from the consumer electronics industry and apply to this EV industry, which has also made the industry a lot more efficient, we think, as a result of us getting into this industry.
That's great. I remember when Xiaomi spent around 18 months to reach 300,000 vehicles. I think probably it's the fastest one. Tesla spent several years. Neo spent several years, and Li Xiang also spent 4 or 5 years. But only Xiaomi spent only 1.5 years to reach 300,000 vehicles. So what's the secret? Why Xiaomi can be so successful as a newcomer in this industry, can sell so much cars in a short period of time?
Thanks, Richard. Look, I do think that when we first get into this auto business, one thing that we want to make sure is we are leveraging our very strong user base that we have in the existing smartphone world, right? We want to make a car that our smartphone users want to buy as well. So that's what we try to leverage, as well as our brand, right? We decided to use the Xiaomi brand, and we decided not to do another brand because we want to maximize the synergies between our core business and our new business, right? And as a and that's number one. Number two is, as I mentioned earlier, we also want to focus on making sure that learning from the best in the industry, both in terms of driving, in terms of smartness, in terms of electrification, in terms of some of the key core components. So if you look at our car, we decided to develop, our own, electric motors. We decided to have our own smart cockpit system. We decided to develop our own autonomous assisted driving technologies. And those are the stuff that not only do we focusing on, the look of the car, the smartness of the car, we also focus on making sure that it's a good car to drive. So if you look at the reviews of our car, it has been many people commented on how good it is a car to drive, how smart this is, and so it helped us, achieve a very good initial responses from our users.
Yeah, I personally test drive almost every single new model of Xiaomi's car.
Thank you.
That's very, the driving experience is amazing. My question is, domestically in China, Chinese, there are quite a lot Mi fans. But outside China, have you seen this kind of movement, not only in smartphone, but also in the automobile? Because I think a lot of consumers globally, they are waiting for Xiaomi's car, but now availability probably not there yet. So can you talk about your global strategy?
Sure.
Not only for smartphone, but also for automobile.
Sure. In a way, if you think about our position in the smartphone business, we are already the number three smartphone OEMs globally for the last 5 years. And our market share has been steadily increasing. So if you think about my smartphone user base, right now I have over 700 million smartphone users globally. And out of that 700 million, only about 170, 180 million are based in China. So I do have a huge global smartphone user base globally outside of China. And obviously, we are top number 2 in Europe, we're number 2 in Latin America, number 2 in the Middle East, number 1 in Southeast Asia. So we do have quite a significant market share in a lot of the global markets and regions. And I spend a lot of time traveling outside of China as well, going to these regions. And you've seen that there is a lot of excitement for our car. Everybody recognizes our car. Our car was doing test drive on the Nürburgring in Germany and has achieved very, very good result. And that's pretty well recognized by people in Germany, people in Europe. Although we're not selling our cars outside of China yet, we have sent our car to many different places. So I've seen my car in Hong Kong, I've seen my car in Singapore, I've seen my car in Europe, I've seen my car in Latin America as a demo. And many, many people are very interested. So we do expect that our car will be quite well received when we get outside of China. Obviously, at this point in time, we are not in the overseas market yet. We only focus on serving the Chinese user because we don't have enough capacity to even satisfy the demand for the Chinese users. Right now, if you go online and order our car, you need to wait at least 12 months for the delivery. So we want to make sure that we satisfy the user demand in China first, but we are already exploring overseas opportunities. And we've announced that we are going to go into Europe in 2027. So right now we have to do a lot more due diligence in terms of the best model to be sold in Europe, the customizations of our product to fit into the European market, the distribution strategy, the marketing strategy, etc. But we do expect that even when our car goes into Europe, it will be very, very well received.
I think the world is ready for a brand new premium car from China. I think Xiaomi can do a very good job.
We hope so.
So my last question, probably a little bit controversial, is regarding the R&D. We know Xiaomi spent a lot of money on R&D, especially on AI, and also self-develop its own AI. So my question is, comparing the peers, the big guy who are in the AI space, Google, Meta, they have much stronger balance sheet than Xiaomi or even Tesla. So if Xiaomi did invest a lot in AI, but comparing to other players, how can you guys make sure you can spend money smartly? Given the size of the requirement to invest in AI should be significant.
So since 2020, we have started investing significantly into R&D efforts, right? From 2021 to 2025, we spent over 10 billion RMB. For the next 5 years, we expect to spend over 200 billion in R&D investments in the next 5 years. And this year alone, we expect to spend over 30 billion in R&D. Obviously, R&D involve a lot of different things. The key areas we're going to spend on is AI, our operating systems, our chipset, which cut across all of our product lines, right? Whether it's smartphones, whether it's IoT, whether it's EVs, they use the same underlying operating systems. They use the same AI systems. In fact, we talk about out of that 30 billion RMB we spent this year in R&D, over 1/4 will be AI related. Overall. So it's still a pretty significant investment, although it doesn't, compare with what Meta, Google, Microsoft they are spending on. But we think that in China the model is also slightly different as well. I.e., we do not, for Xiaomi in particular, we are not trying to develop a large language model to sell to outside.
So in-house use.
We are thinking about whether it's the operating system, whether it is the AI, is the chipset, whether it is AI, it's all for captive use, right? So what I need to do is to spend enough to make sure that I have, good use cases for our users, right? As opposed to selling cloud services, selling big, large language model for other people to use, right? So that makes sense. Also, our investment in AI started in 2018. So over the last 7 years, we spent a lot on AI. And as a result, because of our big ecosystem of hardware products, we've already accumulated, a lot of data that we can use to train our own model as well, right? How do we make sure that our users, when they want to ask questions, we give them the best answers? Number one. Number two is the AI that we develop can also be used to enhance my internal operations. So how do I improve my sales systems? How do I improve, how to build the next store, where to build the next stores? And also we're using AI in a lot of different ways, like when we're developing our own EV, some of the materials that we use AI to figure out what's the right formula to make those materials. So as opposed to just making large language models for consumers, we're also thinking about how to deploy AI to make our own internal operations more efficient, how to enhance the materials we used in our products. So there are a lot of use cases, not just the AI for consumers. And we think that there's a lot of opportunities. We're going to continue to spend a lot on making sure that it is more interesting products as well, right? Like Richard, we introduced a new AI smart glasses earlier this year, and that was very well received by the market. So number one, collecting more data from our users. Number two, developing our own model more efficiently, but importantly, making sure that my user experience continues to be enhanced through AI.
That really makes sense. Xiaomi spent more than 7 years in AI, investing in AI, also more than 700 million users globally. So the car users plus, especially smartphone users and home appliance users, and the data can be shared. That can be a very good material for the AI model. And the AI model can also deploy internally to help different business line to enhance the efficiency and eventually to improve the user experience. I think that's really smart strategy. Hi, Jason. Let me bring you back into the conversation on the investment front, especially the CNQ ETF. So my question is, we understand right now the CNQ is a very smart idea, investing in China, investing in the Chinese tech companies, China ADR, the best high quality Chinese technology company, we go CNQ. But why now? As we know, in the last 2 years, the technology companies' valuation quite volatile, and the stock market is also sort of volatile. And going forward, U.S.-China trade war probably will have some impact on the valuation on the stock market. How do you think right now is a good timing to invest in CNQ?
Well, Richard, why right now? Well, first of all, prior to right now, China, as viewed from the global investor lens, was uninvestable, right? And so China simply had to sort of distance itself from some of the events that sort of soured its branding with global investors. And because of the DeepSeek moment, and as I said, the DeepSeek moment is like when California first rivaled the French in winemaking. And today, California, you cannot talk about winemaking without talking about California. DeepSeek brought about that moment. So DeepSeek really is a critical point in the timeline, right? Post that point, the world came back in a big way and say, no, China is not uninvestable. right? Because it is going to emerge and be a true competitor to the US on the technology front. So I would say, the world's long gone past the question of, well, if China and US move away from this collaborative value chain partners and become competitors, would that be really bad from China? I think the world's now saying, yes, China is going to be a competitor to the US because it is emerging from just a pure manufacturing, a outsourcing part of the ecosystem to an innovator. And once it's an innovator, it will compete with the US for market share. It will compete with the US in terms of developing a technology in a winner takes all type of sort of technology race. So really, if you exclude China from your portfolio, you're missing a key market that because of the US-China relationship, and this key market may be cut off to American companies. It may be cut off to the iPhones, to the Coca-Cola, to the Nike, and it may only be accessible by buying the Xiaomis, buying the BYDs, buying the Alibabas. And so that is really a new awareness, and it is not harmed by sort of the increasingly competitive situation between US and China. So why now? So if you're going to play AI, if you're going to, allocate to growth assets, well, you can buy the US and you can buy at 40 times trailing earnings, or you can buy, comparable sort of human capital talent, comparable innovation driver like a Xiaomi at half of that valuation, right? And so this is a way of diversifying your bets and buying comparable growth trajectory assets.
Jason made a very good point. And 2 years ago, the global investors talk about everything but China, everything without China. But right now, almost all the investors are thinking about investing in Chinese companies right now. And another thing is, as Jason mentioned, not investing in Chinese tech is not de-risk, it's at risk. It's at risk. And also, if you look at Chinese companies' valuation, technology companies' valuation, it's only half or even lower than the US technology companies. For instance, in the e-commerce space, all the Chinese internet e-commerce companies combined together, the market cap is still smaller than Amazon. And the total GMV is several times bigger than Amazon. So before we wrap up, let's have a quick rapid fire round. The go ahead is instinct. Give us your first answer when it comes to your mind. We will switch between you two. So the first question go to Anna. Can you tell me Xiaomi most underrated non-smartphone, non-car product?
You should try our tablet products, right? We are number 3 in smartphone, but we are number 5 in tablets globally. So there's a lot of potential for growth for our tablets to match with the market share in the smartphone business. But if you try my tablets, I can guarantee you have a much better user experience than other Android players at a much lower price than the iPad.
I will try in the afternoon.
Yes.
Jason, AI or EV, which one is the big global disruptor in the next 5 years?
AI.
Oh, good. Another question go for Jason. Excluding Xiaomi, we know Anna is here. So one stock in the CNQ index you most excited about?
I'm most excited about Alibaba because it's gone from just e-commerce to now an AI company, almost like Tesla being from a car company to an autonomous driving company. So it just changes the landscape, the valuation completely.
Yeah, it's quite cheap right now. Great. Anna, your favorite Chinese comfort food or street food?
You should come to our canteen. Our canteen serve all of our employees very, very diverse type of Chinese food and foreign foods. Try it.
Okay. I've tried before. Anna, what's Europe or Southeast Asia or Latin America? Which market is the toughest one for you when you go global?
Well, look, with all these geopolitical stuff going on right now, I mean, Europe is probably much more difficult. Southeast Asia is closer to home. A lot more Chinese over there, so culturally it's much more compatible.
Great. Jason? do you have any advice for Chinese young startup founder? Because you have done a fantastic job as an entrepreneur in the financial industry.
Yeah, it's a lottery ticket, right? 99% of people who start a startup fail and regretted it. But I'll tell you, even in failing, it is the most exciting thing you can ever do for yourself. You'll learn a lot, especially you'll learn a lot of humility, and that's never a bad thing.
Great. Alan, do you have any suggestions for the Chinese young entrepreneur?
Well, focus, right? Because there are a lot of things you can do as a young founder. The key is to focus on what's core to this business.
So the last question for both of you, one word to describe the future of China tech. Start from Alan. One word.
I'll use Jason's word, investable, very investable right now, right? I mean, we always like to benchmark ourselves against the Apple of the world, the Tesla of the world. You think about, Apple's market cap, $3.5 trillion US. Tesla is $1 trillion. If you look at Xiaomi, we were 160 billion, right? So there's a massive gap between, what we offer versus what we are showing up in terms of market cap. So China tech, very investable.
25 times increase potential for Xiaomi's market cap.
Hopefully.
Great.
The word is underestimated. I think people still underestimate China. They still want to believe that China is that version of China from 20 years ago. They haven't seen China recently. They are underestimating the potential, the talent, the capabilities.
So from uninvestable to have to own, from underappreciate to appreciate. And the two distinguished guys made very good points. So from investment strategy with Jason to corporate innovation vision with Alan, today's discussion has illuminated a very clear message. Chinese tech is entering a defining moment. The world is taking notice. As we have heard from both Rainian and Xiaomi, Chinese tech companies are demonstrating not just technological powers, but also global vision and unique identity. The convergence of AI innovation, ecosystem expansion, and aggressive international growth presents unprecedented opportunities for investors seeking exposure to the next wave of technological transformation. Looking ahead, we are optimistic that Chinese tech will continue to deliver both innovation breakthroughs and sustainable returns. For investors worldwide, this is more than a moment to simply watch. It's a moment to actively engage. Thank you so much to our distinguished guest, Jason Su of Radiant Global Advisors and Adam Nam Xiaomi for sharing your invaluable insights today. And thank you to all of you for joining us. This has been China AMC's Tech Innovation Deep Talk. Until next time.